Hi, welcome to this episode of the First Trust ROI podcast. I'm Ryan Isakainen, ETF strategist at First Trust. Today, I'm joined by Jeff Chang, president and co-founder of Vest Financial. Jeff and I are going to discuss the risks and opportunities associated with Bitcoin and new tools that investors have to help manage some of that risk. Thanks for joining us on this episode of the First Trust ROI podcast. I'll be honest, I did not expect that we would be here in 2025 and Bitcoin would be trading over $100,000. And by the time this episode airs, who knows? I mean, maybe it'll be, the base case that I have includes the possibility that it's at 50,000 or at 200,000. I mean, it could go up 100%, down 100 or down 50% in my example. I have no idea. And I think it's a good opportunity for us to discuss a little bit about what we're even talking about, because I think there are a lot of people that trade Bitcoin that have no idea what Bitcoin even is. And so I'm glad to have this conversation with you and dig in a little bit more into what we're even talking about. So to lay the groundwork, when we're talking about Bitcoin, what is it?
Yeah, it's a decentralized currency on the blockchain.
Those are already two words that people are like, what do you mean decentralized currency on the blockchain?
Yeah, so it is, there's essentially Bitcoin, there's a digital ledger that people can mine, or you can actually like mine it, and there's only a limited number of these of Bitcoin. I believe in totality about 21 million is the maximum amount. I think we're close to about 20 million, about 19 and change. So essentially 95% of the Bitcoin has already been mined. So that's already in circulation. What's interesting though, that when all of the Bitcoin actually will be completely mined by, I believe, 2140.
Okay.
So there's actually
that's a long time from now.
Yeah, it's a massive diminishing part of it. I think what makes it special as a kind of a if you want to call it a digital currency or a digital store of gold, is it's just not, there's no government in control of it.
That's the decentralized part.
Exactly, that's the decentralized part of it. And then it does allow for transactions to kind of digitally happen. But obviously, like from a cryptocurrency perspective, it may not be as good as some of the new technology, but it does have that first mover advantage, and that's why it's been so popular.
Yeah, and because it's already out in the wild. Is it possible to change the protocols at all, or are they kind of set as they are?
So that's why Bitcoin being kind of the first mover, it's not as flexible as other digital currencies.
Yeah.
But because it's been so much battle tested, it has become kind of I would say like a store of value as opposed to a currency right now, and because it's in existence through all of the different crises that we've seen, people have some level more confidence in Bitcoin than perhaps kind of younger cryptocurrencies that are out there.
Yeah. So okay, let's talk about it as an asset class, and whether you consider it a store of value or a currency or however you want to term it or name it. It's kind of unique in a lot of ways. So what's the case for people investing in something like Bitcoin as an asset class?
I'll first touch upon why it kind of got there as far as not really a currency.
Okay.
Bitcoin's extremely slow. You can only do 7 transactions per second. Now compare that to like Visa or MasterCard.
Yeah.
You can do thousands of transactions per second. If you're talking about modern exchanges, you're talking millions of transactions per second. So and this is why they call it digital gold, because it's very slow comparatively to other technology. And the ability to build and on top of it, it's a little bit more kind of a older tech. So this is why it creates more of kind of this digital gold effect. Now, when you're talking about investing it, from a portfolio perspective, really it serves several different purposes. One, some folks may look at as a speculative way of making returns. Also, perhaps to express a bullish view from forward technology such as crypto. So that's a lot of people that will invest in that way. There is portfolio diversification benefits to it because it doesn't behave like a traditional asset class that you would say. And so that's where you see that it put into portfolios because of that unique characteristic. And the last is also, like I said, the store of value. Given that I think there was a survey that for investors under the age of 40, 77% of them prefer Bitcoin over gold.
Is that right?
Yeah. So that's why kind of the older generations, while they tilt toward gold, the new Gen Zers, millennials, actually prefer Bitcoin as a store of value as opposed to gold.
Interesting. And so you touched on this a bit already, but maybe you could make another comment on Bitcoin in comparison to some of the other cryptocurrencies. Is it just because it's got that first mover advantage and, as you pointed out, it's a little slower technology that it's really taken on a life of its own? There's other cryptocurrencies that people pay attention to, but Bitcoin, seems to have the lead.
Yeah, mostly because, like I said, it's been battle tested. But that's not to say that from a currency perspective, other types of cryptos can perhaps overtake it basically from a actually a currency point. But I think it's really taken its life of its own as an investment, like I said, store of value. I think what's critical, what's really interesting if you look at the way Bitcoin has behaved, it does really well as the market kind of moves along. So as people are bullish, it actually outperforms, blue chip equities. But what's actually also interesting is that during times of crisis, like when people lose confidence in central banks, when people are questioning government or monetary policy, Bitcoin then actually also spikes. This is why it kind of lends itself to you want to think about the asset class as a tech stock during peacetime and a libertarian lifeboat during the storm, which is a very unique behavior of a particular investment asset class.
Yeah. But it's not without risk. I mean, it's clearly volatility works two ways,
Absolutely.
right? You have the volatility, and it's not going to always outperform. So talk about some of the risks when you're talking about Bitcoin.
Yeah, I mean, there's several different ways to invest in Bitcoin. Obviously you can own it yourself, and that comes with its own risks, such as security risks, like your digital wallet getting hacked or you forget your password or something along those lines. But if I were to just look at the asset itself, I mean, the volatility is extreme as far as your max drawdown can be upwards of 80%, right? So that's part of like being able to stomach that volatility over the long term. Then you potentially could obtain the benefits of like I said, the tech stock during peacetime and libertarian lifeboat during the storm. But you have to be able to stomach that volatility. This is why I think we have built strategies or strategies that actually hedge our exposure to Bitcoin, because that's the part that you have to stomach is that volatility, right?
Yeah.
Perhaps as an example strategy, putting a floor, like let's say a 15% floor on the strategy would be extremely helpful, where you could still retain a lot of the upside, let's say 30 to 40% of the upside for a particular year. That's why we think while Bitcoin can be very helpful in the portfolio, but you gotta, I would say, given the volatility, especially in the financial advisor wealth management space, doing it with guardrails can be extremely important.
Okay, I want to dig into that a little bit more in just a moment. But before we do, you mentioned the wealth management space, and there's been a lot of developments that have enabled that. The wealth managers to be able to allocate to Bitcoin.
Yeah.
Can you talk a bit about the different ways beyond just the traditional, owning on like a flash drive, owning Bitcoin? What are some of the other ways that people can own Bitcoin today?
So actually, let me go in order. The first was derivatives. You could buy futures on Bitcoin, and that really kind of brought it to, I'd say, kind of the Wall Street kind of types where you could actually trade it through derivative form. Then we saw the emergence of derivative-based ETFs that you could access through futures, and then eventually we saw ETFs that could actually own the physical Bitcoin. Now, that obviously there's trade-offs, risks, and so on and so forth. Obviously, in an ETF, you don't have that risk of losing your password or your digital wallet getting stolen per se, but you do get still also the intraday liquidity to ability to trade Bitcoin. And then after that, and then we started seeing options on Bitcoin, which then opens up a whole new way of building strategies where people can access the asset class, not only from hey, I want to let's say on one hand, control the volatility or basically target a particular, like, hey, this is my risk return objective. But also, what's even more exciting, the ability to actually monetize the volatility, get paid for it. Like, as an example, writing cover calls on Bitcoin. And what's fascinating about it is that if you initially looked at the options on Bitcoin, like typically in most like normal stocks, they have what's called negative skew, meaning more people are buying puts than they're buying calls, right? But the interesting thing was in Bitcoin, it was positively skewed. That means more people
There's a lot of risk appetite that tells you.
Exactly. Why not sell calls to somebody that, thinks up, because the volatility is there. There's a lot of opportunity to basically get paid to monetize that volatility. That's what's really exciting. We build strategies being able to do that as well, which is really exciting.
So Vest Financial, just to take a step back, I mean, what you are experts at is developing strategies that use derivatives to achieve income objectives, outcome objectives. You guys are, in my view, you're better than anyone at that. And so you're telling me that you can do that not just on equities and equity indices and fixed income, but also now on Bitcoin.
Yeah, that's right. So that's what's exciting about what we do is that we can reshape those returns, generate income almost on any asset class in which we can source the option on. And so that really opens up a massive world of what we can do.
So Jeff, we just passed the 10th anniversary, I think, of when somebody bought 2 pizzas at a Papa John's. I think it was 10,000 Bitcoins or something like that. Yeah. And now those are the most expensive pizzas ever bought or ever sold. Do you remember hearing about that?
Absolutely. I mean, that's fascinating to me. Like, think about like how much, if you look at the chart of Bitcoin, and how much has actually gone up. But I think what's critical for people to understand is that while it's gone up so much, the question becomes is, you probably heard that, the past couple of years where people are like, hey, the S&P is overvalued. It's got the shiller PE. It's at 27. The question is, what is the PE of Bitcoin?
It's good. That's a very good question.
It's null. You can't put 0 in the E,
yeah.
right? There is no earnings. The value of it is basically how much the next person is willing to pay, right? I mean, you see, like you probably heard the word irrational exuberance in the equity market, right? What does that mean in the Bitcoin market if there's no PE ratio? It does not spit off income, right? Like for that matter, it doesn't even spit off 2 pizzas. There's nothing there. So what that spike is a lot of, is it irrational exuberance? I'm not sure. Yeah. So now you're kind of in this dichotomy of, okay, the next generation views this as a store of value. There's an extreme amount of volatility. The value is determined by, is this irrational exuberance? I mean, great example, Fartcoin went to 2 billion market cap.
Wow.
Bigger than 1,000 of the Russell companies.
Russell 2000
Yeah,
companies.
Russell 2000. Over half. Fartcoin. You know what Fartcoin does? Makes a fart sound when you trade it, right? Like on some of the platforms you trade it, makes a fart sound. And that was bigger than 1,000 of the Russell 2000 companies. It makes me want to make Changcoin, right? Like if I had Changcoin, you know what sound it would make?
I'm not sure.
Cha-chang.
I love it.
But my point in all seriousness is that we don't know like whether it is. There is definitely something here from a store of value perspective, but how do you stomach the volatility, especially as a fiduciary? Like this is why we think if you're trying to invest in the gold of the future, investing with guardrails is probably makes sense. The second component is that there is this extreme amount of volatility. There's an immense amount of opportunity to be able to monetize that volatility and get paid for it.
Yeah, I think that's a really good point because, to your point, there's a lot of uncertainty when it comes to Bitcoin, and there's a lot of, most people, I would say, don't understand it, but they do recognize that for whatever reason, maybe there is an opportunity, but they need to find ways to manage risk if you're getting involved in Bitcoin. Yeah. And the good news is there are ways to use derivatives to manage some of your downside, as you mentioned earlier, to put a floor in to limit the amount of loss that you can have. I would imagine you're long a put contract. Is that how you establish a floor in that sort of strategy?
Yeah, in our strategies, we would buy a put to provide the protection. The great way of that kind of risk managing is it's perfectly negatively correlated, right?
Right.
It's not like I'm trying to manage the risk of Bitcoin by buying Ethereum, right? Not diversifying, but really just hedging the position itself.
Yeah. Yeah. So strategies like that allow people to get that diversification benefit from Bitcoin, allows them to have some of the upside potential, but also, to your point, have guardrails, have some sort of risk management.
That's right.
And that's really, it seems, the newer generation of how to invest in something like Bitcoin.
Exactly. Like, I think the overall message is there are definitely benefits to it. Like I said, it's a unique asset class in which does well when markets are going well, and then when it goes when people lose faith in government and monetary policy and so on and so forth, it also does well. That's a very unique aspect. And then looking at the data as far as where the next generation views the store of value, it's definitely something that investors should think long and hard about, as it is something that is going to be around.
Yeah.
But like I said, the conclusion is, while there's all these benefits, there's an extreme amount of volatility, and there's definitely some risks here. Like, not just the vol itself. Like, if the largest holders of Bitcoin, right, there's a mystery person, Satoshi Nakamoto. If he sells his position, it could crash the price. Like, imagine if, like, I put your entire net worth in something, and one person makes a determination, or even somebody, at MicroStrategy determines to unload. What is the impact of that? So you have all these benefits, you have all these risks. This is why I say, like, you got to get creative on how you access this asset class, and how you, what are the strategies that you're actually getting into to be able to access it. And that's why I think even, from a fiduciary perspective, it's very important.
Yeah. One of the interesting aspects of Bitcoin to me that I've recently looked at was the energy cost of Bitcoin.
Oh, yeah.
And I'm not sure if you've ever looked at this, but I think last year in 2024, Bitcoin mining used enough energy. It was something like 140 terawatt hours of power, which was landed at between Sweden and Poland in terms of their annual use of electricity.
Yeah, that's right.
And it's growing at like a 23% rate over the last 5 years. It's a pretty remarkable amount of energy that's being used to mine Bitcoin.
Yeah, and that's one of the drawbacks that if you read it and study Bitcoin is the amount of power that it actually like consumes, even just from the ledger itself.
Yeah, yeah. And so it's one of these areas that I think a lot of companies are trying to find ways to set up solar farms in the desert so they can monetize that the mining of Bitcoin with solar panels. But it's really interesting, especially in an era where everyone's talking about other reasons for expanding the amount of electrical power, whether it's AI data centers or reshoring of manufacturing or these other sources.
Yeah, and I think that will be more and more, especially you have this power need not only from crypto, but also like you said, powering from AI. That energy need is just going to increase.
Yeah. So when Satoshi Nakamoto first introduced the Bitcoin, I think it was 2009. Do I have that right? 2008. A big part of that was to be completely separate from the financial system because of concerns about debasing currency and the U.S. dollar, and you wanted to have an alternative to that. And now we've come to a point where the U.S. government seems like it has become more friendly towards Bitcoin. Yeah. And, the Trump administration has talked about having our own, U.S. It's like a strategic reserve. Oh, yeah. Kind of like the oil strategic reserve that we have.
Yeah. What's actually interesting is the U.S. government actually is one of the top 10 holders of Bitcoin.
Yeah.
You know why? Seizures.
Because they seize it, right?
Yeah. And then they don't know, it's just sitting there.
Yeah.
I believe, if I got it right or wrong, about 200,000 Bitcoin owned by the U.S. government, if not more.
Yeah.
Today, mostly through seizures. But you did touch upon a point that's extremely important. There's another major risk that people write about. It's regulatory risk. Mm-hmm. Depending on which country you're in, the regulation and your ability, like tomorrow, any government could say like, hey, it's illegal to have Bitcoin, or that's the most extreme. But regulatory risk is a major risk of Bitcoin. There could be changes in just fund construction, right? Like some of the largest holders of Bitcoin are funds, from the ETFs to private funds. You see it on the blockchain. So that is definitely a risk, because just by changing a law in a fund, it could cause any one of these funds to have to liquidate their entire position. So that's definitely, like you touched upon it, is a major risk. Also, lending itself on why hedging is also probably a good way to access this asset class.
Yeah, and because when you're owning a derivative on an ETF or something like that, that's kind of separate from, you don't actually own the Bitcoin. You have a contractual agreement with someone else who sold you that or bought that contract from you, right?
Yeah. So that's what's great about option. We're just pointing at the movement of something else, and that determines the value.
Yeah.
And then the great thing is, if as exchange traded options, they clear on the exchange, and so you don't have the, let's say, the counterparty risk of trading with one person per se on a particular derivative contract.
How liquid have those contracts become? They've been trading for a while now. Is it something that's very liquid?
Oh, it's fascinating. So when I believe the IBIT option came out, I think it was like late last year. Within its first month and a half of trading, it became the 5th most traded ETF option.
Is that right?
In the market. And so how wild is that when you have SPY, GLD, all the Russell, the NASDAQ, all these things? It became the 5th most traded option, ETF option out there. And that was just in the first month and a half. So that's how the liquidity of that space. And like I said, it could be a lot of people speculating and so on and so forth, but there's a tremendous amount of volume there.
Mm-hmm. And that's good if you want to access exposure to any of those contracts, to have more. It doesn't matter to you, in other words, if someone is just scratching their speculative itch and they're betting in their mom's basement eating their mayonnaise sandwiches. They're, as long as they're transacting, that brings volume and liquidity. Yeah, interesting. I love the image that you painted of who the typical trader is of some of these options.
I've seen that person before.
All right. Jeff, any final, what haven't we talked about when it comes to Bitcoin and investing in it?
I would say definitely something that will be there in the future. And people should really look long and hard at it, really understand it, meaning, look at the vol, understand that component, and then pick the right strategy for them to access the asset class. Because, like I said, if you're looking at, and there's several surveys about this, that the next generation, the younger generation, views this as their version of gold. I believe that it definitely has some place in the portfolio if that's the case. Just access it the right way.
Okay. Well, we haven't talked about a lot of your other, what you're doing over at Vest Financial. Congratulations on a tremendous amount of success in the product line. It seems like, every other day you're finding new and innovative ways to get exposure to assets, to generate income, to manage risk on the downside. And, you've been a true pioneer in that space. And so, congratulations for all the success. It's been a great partnership with Vest Financial, sub-advising a number of First Trust ETFs. And so that's been great as well.
That's been fantastic. I think the partnership has been phenomenal.
Yeah. And of course, thank you for making another appearance on the podcast. Absolutely. It's always great to have you join me for a little chat.
Always great to be here. Can I get your autograph, David?
Yes, when we're off camera, we'll exchange jerseys that are autographed.
Okay,
how about that?
Perfect.
Okay. Again, thanks for joining us.
Yeah, thank you.
And thanks to all of you for joining us on this episode of the First Trust ROI podcast. We'll see you next time.